Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, March 13th, 2020. And here are our top stories. Making sense of market turbulence, and activist investors try to get Twitter's CEO to resign. Well, joining me now is Devin Banerjee. He's a senior financial services editor for LinkedIn, and he's also the editor in the This Week in Finance newsletter, a newsletter you can find on the LinkedIn platform. Devin, welcome back to the program.
Thanks for having me, Jeff. Live from my house. I'm working from home.
Yeah, and that seems to be the case with a lot of Americans now. A lot of companies sending their employees home, big and small. LinkedIn's no exception here. Let's see if we can tamp down the spread of this horrendous virus.
Absolutely, very important.
So let's. I know you want to talk Corona. You also want to talk market volatility, scaring a lot of people. What are you hearing on the platform?
Yeah, very closely intertwined. The threats of the coronavirus are really hitting industries hard, and that is rippling over to the stock market. So we're seeing historic volatility this week and last week. And we on LinkedIn noticed a lot of ordinary, everyday savers and investors were looking at these headlines and saying, what does this mean for me? Should I be doing something? There's so many red headlines and people screaming on the television. Should I be taking action? So we decided to reach out to thousands of financial advisors on the platform and ask them, look, what are your top 2 or 3 pieces of advice for everyday savers and investors who are seeing this news and wondering what to do? So I just want to say, straight up here that, I'm not offering this advice and people shouldn't just follow this blindly. Of course, if we don't know your full financial situation, nobody can offer advice. But these are the top 2 or 3 general things that these hundreds of financial advisors who responded said. So the first one I'll start with is acceptance. Accepting that swings in the market are normal. And actually that is the case. If you look into the data and look back over time, swings of this magnitude, even 5-6% in a day, do happen regularly. They're kind of normal occurrences in the market. And this was the number one piece of advice, which is to not take any drastic or dramatic action based on daily news or daily headlines. We call this action bias. People are biased to thinking they need to do something because there's so much action going on. There's external actions are occurring. People think they need to take personal action, and that's not always the case. The second thing to think about is an emergency fund. This is something everyone should kind of have, thinking about liquidity or a cash position. People sometimes recommend about 3 to 9 months of your take-home pay. You need that as a buffer. The third thing is, of course, if you are invested, is to review your investment plan, to review, or some people call it, financial advisors call this an IPS, an investment policy statement. But you want to think about your risk tolerance, which is a combination of your ability to take risk and your willingness to take risk, and then come up with an asset allocation from there. And what a lot of these advisors said, which I agree with, is if you're losing sleep over daily moves like we've been seeing the past week or two, then your allocation probably is not, correct, because you shouldn't be losing sleep. You should have, money allocated across the risk spectrum to withstand moments like this and to take advantage of moments like this and other moments. And the last thing I'll just mention that almost everyone mentioned is accountability. So all of these things we're talking about kind of lose their meaning if you get emotional when something happens and you deviate from your plan, very easily. So you want to have a friend or a spouse or a partner or yes, a financial advisor kind of holding a copy of your statement, if you will, metaphorically, someone who can gut check what you're doing and who can keep you accountable.
Yeah, I think that's all really good advice. And I would say number 5, Devin, 4 words: turn off the television.
It's true.
You by looking at it constantly, number one, media outlets, they have a vested interest in you watching TV. And so the more they can hype something, get you watching TV and hearing about it, the more you're going to be into it and hearing about it. I think the best thing to do is kind of turn it off, accept it like you're saying, and know that markets go up and markets go down. This is history. We have been very privileged is the word I would use, that we've had a bull market for 10, 11 years. But we have gone through volatility recently.
Yeah.
So I think you got to accept that.
Yeah, a lot of those phrases I even just used the past couple of minutes, historic volatility and plunging. It's because I'm a journalist and I'm used to saying that, and writing headlines like that. But to be honest, these things are temporary. They're daily moves. And yes, if you're an everyday saver or investor who isn't working in this area and needs to know about it every day, I agree with you, Jeff. You can turn off the TV.
I've been getting texts from people that I know. People are concerned. We've also on the network have been speaking to people who run call centers for brokerage houses, for 401k. Call volumes is obviously up. And, you need that reassuring human touch. I need it. I like to talk to my friends. My parents makes me feel better knowing that the sun will come up another day and we'll have at it again. So, but really great story, Devin, and really great advice. There's nothing more I could add. Yeah,
absolutely. And we talked about this a bit last week with Robinhood, which is culturally, trading and the social aspects of trading, talking with your friends and sharing on social media how you're trading or your ideas. I think there are a lot of embedded dangers or risks associated with that, encouraging people to churn their portfolio or take a more short-termist view. So this is something that's going to be that's already been in the conversation and is just going to continue to be as we see this volatility in the market.
Yeah, you just cannot, one person, a team cannot beat the market. Give it up, folks. So Devin, I want to go to break. We come back, we're going to talk to Devin about activist shareholders and having an impact potentially on Twitter. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Devin Banerjee. He's a senior financial services editor for LinkedIn, and he is also the editor of the This Week in Finance newsletter. Devin, thanks so much for sticking around this morning.
Absolutely, Jeff. Happy to.
So let's shift gears from Corona and market volatility. Let's talk about activism and shareholder activism. I know you have a story or a couple of stories you want to talk about.
Yeah, a story not related to coronavirus, but this was a really interesting story in the world of shareholder activism. About a week and a half ago, we saw the big activist hedge fund Elliott Management come out with a big position in Twitter, a stake of just over $1 billion, just over 4% of Twitter. And Elliott was pushing for actually the removal of CEO and co-founder Jack Dorsey. Elliott nominated about 4 directors to the board of Twitter who would put in place these changes. And Elliott was calling out, the performance of Twitter stock, lagging some of its peers like Facebook, also lagging the social and political influence that we see Twitter have in the world that hasn't been really reflected yet in its business model and its profitability. And what's interesting about the story is a couple things. One, activist shareholders targeting a founder-led company is not so common. Founder-led companies have a very different culture than a traditional company with a management team that's put in place by a board over time. And so a technology company like Twitter being led by its founder, very strong culture, and that's typically difficult to influence. What's also interesting is it only took about a week to actually reach a truce. So just a few days ago, the two sides came to an agreement. Twitter agreed to 3 new board directors, 2 of which have been handpicked. Well, one of whom works at Elliott, the other works at a private equity firm, Silver Lake, which came in with Elliott to make an investment in the company in Twitter. Twitter agreed to $2 billion in share repurchases, $1 billion of which will be funded by Silver Lake, the private equity firm. And Twitter agreed to higher standards for delivering growth and profitability. And so I found it really interesting. This points to the kind of institutionalization of activist investing. Activist investing, didn't really exist as an industry in and of itself just a decade ago. It really came into fruition and into influence during this past cycle. And so, seeing this industry target larger and larger, more brand name companies like Twitter is really interesting. I also find it interesting that activist investors and private equity firms have been coming together much more. In this case, Silver Lake, a typical growth and buyout investor, is coming into an activist situation with its investment alongside Elliott. And there is actually a Corona element to this, which is a lot of activist investors are talking about this proxy season. The proxy season are the months leading up to AGMs, or annual general meetings, annual shareholder meetings of companies. In America, 95% of those annual meetings are held from April to June. So this is the time when activist investors come out with their proposals, unveil stakes in companies, and try to sway shareholders ahead of the meeting. And there's this big question about whether shareholder meetings will continue as planned. Of course, they may not be in person and they may go virtual, but just the volatility in the markets is also raising questions about this proxy season and whether we'll see as many proxy fights begin during this uncertainty caused by the coronavirus.
Yeah, you just made me think of what's his name from Wall Street when Anacott Steel, right? They buy Anacott Steel. He goes in and he has an activist tried to take over the company. He's pointing out all these board of directors. That's
Anacott Steel, right? That was the secret code.
Blue Horseshoe buys in. That's right, absolutely. But Devin, in all seriousness, have we seen Twitter and Facebook kind of wane a little bit in influence? I know that people tend to get worked up when they see certain people tweet, but I got to tell you, I spend a lot of my time, and I'm not a shareholder, I'm not an owner of LinkedIn, but I tend to focus my attention more on the LinkedIn platform because it's a little bit more, in my mind, serious and business oriented. Have we seen some of these, Twitter, anybody can go out there and post their point of view, and then maybe one or two things go viral, have they just maybe lost a little bit of their influence?
Yeah, I mean, looking at the numbers, I would just say the growth in users at platforms like Twitter and Facebook have disappointed shareholders sometimes over time. We've seen that with Twitter, and that is partially one of the drivers behind this activist situation. Elliott is looking at Twitter and saying they have amassed so many users, so many influential users, and maybe it's not being monetized to a high enough degree amid this slowing in the user growth. So that's certainly something, investors care a lot about. And I would also say that, these platforms are diversifying. They're looking at other ways to bring in revenue. Facebook has certainly done that as a company, and I'm sure these activist investors want Twitter to as well. And the last thing I would note is this agreement that the two sides reached this week between Elliott and Silver Lake and Twitter was very clear that these new board directors, which are Jesse Cohn from Elliott and Egon Durbin from Silver Lake, would not really have a say in the policies of Twitter or the user policies or stuff like that, especially as many people are kind of calling for or talking about, as you alluded, Twitter taking a harder stance against certain users, including the President of the United States, Donald Trump. There's been a lot of talk about censoring, people like him or even his specific tweets or accounts based on Twitter's policies of verbal harassment and things like that. So during an election year, it's an interesting time to get involved with a company like Twitter and call for changes. But the agreement was very clear that Twitter's management and product leaders and CEO Jack Dorsey will still retain control over those policy decisions at the company.
Yeah, really interesting. And again, I go back to the thing we were talking about in the first segment, which is if you're constantly tuned in, and maybe people are just like, it's just too much. It's too much. I can't tune in. What's it Timothy Leary said? Tune in, drop out. There was another part in there that I'm not going to mention on the network. I think it's like it's probably illegal. But anyway, I just feel like it's just too much. And if you're just following it all day long, how productive can you actually be? I just can't bury my face in the phone. I'd rather be on LinkedIn watching you and This Week in Finance, Devin, and all. And he didn't pay me for this plug, folks. Devin, always a pleasure talking with you. Thanks for highlighting these great stories, and we'll talk to you again next week.
Thanks so much, Jeff. Take care.
And that wraps up this episode of BRN AM. Hope you enjoyed it. Hope you found the content educational and entertaining as well. And don't forget, we're back again tomorrow for our weekly show, BRN Weekly. You're not going to want to miss it because we've got some very special guests. And don't forget, for all the news in retirement markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Keep on saving, and don't forget, roll with the changes.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.